Do you ever wonder what it means to own a stock? Today we're diving into the world of finance and investing to demystify the concept of stocks. Just imagine, when you buy a stock, you are essentially purchasing a small piece of a company. Yes, you heard that right. You become an owner, a shareholder, or stockholder in that company. This means you have a claim on a portion of the company's assets and earnings. This ownership is often proportionate. The more shares you own, the greater your stake in the company. Now, some of you might be thinking, does owning stock come with any perks? Indeed it does. Some stocks come packaged with voting rights. This means you, as a shareholder, can have a say in the company's major decisions. These might include electing the board of directors or approving significant corporate actions. Quite a power to wield, isn't it? But what about monetary benefits? Well, some companies pay dividends to their shareholders. These dividends are typically a portion of the company's profits. However, not all stocks pay dividends, with some companies choosing to reinvest their profits instead. The primary way investors profit from owning stocks is through capital appreciation. This happens when the stock's market price increases. So if you sell your shares at a higher price than what you initially paid, you make a profit. However, it's crucial to remember that investing in stocks carries risks. The value of a stock can fluctuate significantly over time. Economic conditions, market sentiment, even the company's performance can all affect stock prices. Now, where does one buy or sell these stocks? They are traded on stock exchanges, such as the New York Stock Exchange or the Nasdaq. These exchanges act as a marketplace for investors to trade shares of publicly traded companies. Each publicly traded company has a unique identifier, a ticker symbol. This is a short abbreviation or code used to identify the company's stock on the exchange. For instance, Apple Inc. is known by its ticker symbol, AAPL. To wrap it up, stocks represent ownership in a company. Owning stocks can come with voting rights and potential dividends. Investors can profit from stocks through capital appreciation, but should be aware of the associated risks. Stocks are traded on exchanges and identified by unique ticker symbols. Investing in stocks is a common way to build wealth over time. However, thorough research and understanding of the risks are essential. Remember, the stock market can be volatile, and returns are never guaranteed. Diversifying your portfolio with a mix of different assets can help manage risk. So next time you think about stocks, remember, you're not just buying a piece of paper or a digital entry in your online account. You're buying a piece of a company, a stake in its present and its future.